AUD-USD. AUD-USD, very, very bearish, as you can see. Let's go on the 1 hour to look for possible trades. All right, we have this unmitigated supply, bigger 4 hours unmitigated supply also right here, and these are possible zones for sales. Let's look at the overall move to the downside, which I would say started from up here. Do you agree? Started from up here, right? And let's put the 50%, 0.5, right? 50%. This, okay, maybe I didn't explain it this way, but it is basically what it is. Let me show you in a second. All right, as I was saying, we put the 50%. Maybe I never explained it this way because I was just explaining it to actually enter trades. But anyway, the reason why I'm entering at my fib levels is because we are basically taking an overall move, for example, this move right here, okay? And we are finding the areas where the price could be discounted or at a premium to actually enter the trade. Now, after this, after understanding this, I found my fib settings that will fit my trading the most. So the 0.79, 0.62, 0.705, and so on. But before that, we start from this basic thing, which basically means that, oh, the opposite, 1 second. Basically means that we are not looking for sales in this area, but we could look for sales in this area. Reason why I'm saying this is because we had a big move into one direction, and the price here is not at a premium, is not at an interesting area. If we wait for a retracement which discounts or either puts the price into a premium above or below the 50%, then it becomes interesting, okay? So I go back and put my fib settings, and here we had the 50%, and above I have my fib settings. Now, of course, sorry for the noise. Of course, this is not going to help us to understand if we want to short from here or from here, but I just wanted to explain the 50% and how and why the price is discounted with the Fibonacci levels and so on. So we took this move to the downside, understood that it is discounted above the 50%. Of course, we have our fib levels. I will not keep them right now. We just know that there are, and we have our areas, and I will put some alerts at these areas, and we will see what happens once the alerts are going off. Now, I don't think that it will happen today. Possibly we have some more intraday moves in between right here. Inside this price, but I'm not looking for that right now. Anyway, let's zoom in on AUD-USD. Yeah, I would say I'm not looking for anything right now. We just created a higher low. Here we have some type of higher highs and higher lows. But again, this is just smaller. We have to look at the overall picture. All right. Anyway, GBP-USD just continued bearish, completely bearish. I looked for buys yesterday, and well, I showed you already the analysis because we had a nice and clear breakout structure to the upside with a nice candle closure, very big momentum. So I really liked how the price was being delivered. Also we just rejected, this demand area, waited for the retracement, possible buys, didn't go as expected. Anyway, we just continued to the downside, big moves to the downside. And now we just have to wait for retracement to enter some possible trades. We're leaving behind some imbalance. Sorry, I just keep accepting people who are connecting. We are just leaving behind even small, but still imbalance. And right here, actually, no, only up here. All right. Only up here, just a little bit of imbalance and a big order block right here. All right. And therefore, I would just wait for a retracement to the upside, and I will look for sells on GBUSD. As you can see, oh, well, we have equal highs up here, but I will not talk about that right now as it will be a little bit too far. Let's see if we have some areas. Equal lows down here, of course, taken out already. No, actually, that's it. I'm just waiting for the retracement, basically. GBUSD covered. Let's go to GBAD. As I was saying, I don't know if you saw my weekend video analysis, but I was not really confident into entering buys on, let me delete a couple of things, on GBAD. The reason why I didn't want to enter buys, it was because, yes, we are breaking structure and so on, we're going to the upside, but at the same time, we've been going to the upside for a very long time. The uptrend is really overextended and it's quite risky to enter after we are this much overextended. Also, these are, yes, these are some breakout structures, but on the 4 hours, maybe you can see better, this could just look like a Wyckoff distribution with, you know, the equal highs, grab of liquidity, continuation to the downside. So I was really seeing a possible Wyckoff distribution also on the 1 hour, a smaller one right here with the buying climax automatic rally secondary test, spring, whatever break structure, even if it is not really the break structure I will be looking at. We have a minor break structure here. The major one will be down here. And test of the spring, continuation to the downside. Now, I was not confident for buys. I was not confident for sells either because we are in an uptrend. Why would I look for sells even if we are in an uptrend? So what I decided to do is not even wait for a minor breakout structure, but wait for the major breakout structure to occur down here. Once this happens, which I will put an alert right here, and I want to see a candle closure below that, not just, you know, not just a wick. I want to see a candle closure below that. Then I will wait for a retracement, and we have a supply from up here. Perfect, with imbalance just below it, which is being left behind since we are pushing very, very fast into a direction. Here and also here on this candle. Right? What does a breakout structure tell us? It doesn't tell us, well, it tells us a lot of things, but also nothing. It tells us the possible direction of the market, since the breakout structure is to understand the market structure. So basically, we want to understand if we are currently bearish or if we are currently bullish. Depending on where we have the breaks of structure, we understand the direction of the market. So here we were breaking the structure to the upside, breakout structure, retracement, breakout structure, retracement, breakout structure, retracement, another breakout structure right here to the upside, retracement, and then we didn't continue. We failed to create a new higher high. Well, even if we failed to create a new higher high here, these breakout structures were telling us that we were bearish, we were bullish basically. We were breaking structure to the upside, and basically what we should do is wait for a retracement to our key area, enter for a continuation to the upside. Now, a breakout structure here will tell us, first of all, it would confirm the overall bearish Wyckoff distribution, which is this one. And if you don't know what it is, I have a Wyckoff PDF on my course. I have two videos for the 1 minute strategy, which is basically about Wyckoff, a little bit more simplified, but still about Wyckoff. And a breakout structure down here, it would confirm the overall schematic. So we have the breakout structure, we will confirm that we are turning bearish, and then we can finally look for sells. Because let me tell you, if I just have a retracement from here, I will not look for sells because I'm not bearish yet. 100% bearish, I'm not 100% bearish, okay? Could just be, you know, a mitigation of demand. Try to look at the other way around. Let me delete this other stuff. So it could just be a mitigation of demand, grabbing liquidity below the equal lows, right? So we have equal lows down here, grabbing liquidity below them, tapping into the demand for a continuation to the upside. Could just be that. But if we do wait for the breakout structure and it actually happens, first of all, we are invalidating this demand. Second of all, we are changing market structure, turning bearish, and therefore I will be looking for sells at this area. So try to always look at it the other way around, right?